All right, let us officially start. Welcome to today's webinar. This webinar, as you can see right there on the screen, is titled The Options JumpStarter. It is a beginner's guide to profitable options trading. As the name implies there, it says a beginner's guide to profitable options trading. So if you are, let's say, advanced, I guess that's the opposite of beginner. A beginner, if you're an advanced options trader where you're already doing multi-leg option trades, you're doing repairs and adjustments, maybe this webinar is not the right thing for you, but you might still learn something. I'm not saying you won't, but this is a webinar to, whether you're struggling or new, to get you a strong foundation on how to be trading options the right way from the very beginning. And I'm really excited about it, because I'm going to be showing you exactly what you need to be doing and what you need to know to start using options in your trading. There's one thing I really want you to get out of this, and I really want you to understand, and it's until you know how to use options correctly, right? Until you know how to use options correctly, your portfolio won't be able to achieve its full potential. That's why this webinar is so important. A lot of you might be doing pretty well as an investor, just buying and selling stocks. But until you know options, you won't be able to shift into the next gear. It's like you're stuck in like second or third gear and you can't get into that next gear. This learning options will unlock that next level, that next gear. And my promise to you is that in this webinar, you're going to see how you could use options the right way to make money in both up and down markets, to help you possibly double your annual returns. And I'm going to show you some evidence of that in today's webinar. In the first half of today's webinar, you're going to see how that's possible. Now, for those of you who don't know me, my name is Brian D'Amico. I am an instructor here at VectorVest. I'm in the red shirt. My buddy over there on the side there is Jim Penna. He is our manager of retirement services. And you might hear retirement services. What is a retirement coach doing here on an options webinar? Well, guess what? Options are a key part of all types of investors, whether you're a swing trader or a retiree. And Jim Penna is here. He'll be in the chat throughout today's webinar. But let me actually bring him in, have him say hello. But also I'm going to ask Jim a question that, Jim, once you come in and say hi, would you consider, like, even for retirees, that options are important?
Yeah, hi, Brian, and welcome everyone into our presentation today. Glad to have you here. I think you guys will walk away with some really great information. And Brian, to your question, absolutely. I didn't come up. Tool to your arsenal here. So glad you guys are here.
Awesome. Thanks, Jim. And like I said, Jim will be in the chat throughout the webinar. We'll bring him back in again towards the end of today's session. But please ask questions in the chat. If you want to pick his brain about options or retirement, or have a question about today's session, please type it into the chat as we go throughout today's session. Jim and I are actually members of a bigger team here at VectorVest. A lot of you are familiar with VectorVest, whether you're a subscriber or on a trial, but VectorVest has been around since 1988. And there's a huge team here at VectorVest to help you become more profitable and prepare yourself for retirement, like a worry-free retirement. Okay, so I used to actually be a third grade teacher. This is decades ago now. It's over 20 years ago. But I think that teaching style is going to help you in today's webinar, especially in a topic where we're learning how to start off with options. Now, I do like to have fun. I like to interact. Hopefully you're ready for that, because I'm going to be asking you lots of questions throughout today's session. Obviously, in 1 hour, I wish I could give you like everything possible about options to build a complete and system from A to Z, but there's only so much we can cover in an hour. At the end, if you do want more information, I'm going to point you in the right direction, say, hey, you should go here. All right. If you are ready to go, again, I promised you ask you this question again. If you are ready to go and hop in there, give me one more yes in the chat. Perfect. Vincent, you were the first one in. Ira, James, excellent. Now, Jim and I have been with VectorVest. I've been with VectorVest over 20 years. Jim's been with VectorVest almost 20 years, I believe. And when we came to VectorVest, and throughout these years, not everyone who comes for training is an options expert. We actually had somebody earlier today who said they just don't know where to begin, right? They're a novice, right? And I think some of you might be in the same spot, and you can let us know in the chat. Those with no experience or limited experience tell us things like, I just don't know where to start. I want to use options, but I don't know where to start. I feel confused. I feel intimidated by all the terms, but I just really want to use the leverage that come with options. I hear I'm able to get, big gains with options. And when you're trying to grow your account, especially for retirement, growing your account at a faster rate can become extremely important. So I want to show you how to do that in today's webinar. This is the journey that we're going to take today. This is the agenda, basically. The first thing we're going to look at is how to filter out all the noise so you know exactly what the important terms are. So we'll do that. Then after we do that, I like to think of it as building layers to your knowledge sandwich. So we're going to start with a strong foundation of the key terms, and then we're going to go into knowing when is the best time to place the option trades. Because there's a right time and a wrong time. We'll do that, but we can't just stop there. We need to know how to then correctly set up an option trade. Because you can't just go out there and just blindly be buying calls and puts whenever you want. You got to set up the trade correctly from the very beginning. And then once we do that, we're going to walk through the 5-step option trading system that we use here at VectorVest. Okay? Now, I like to reward people who stay to the very end. I think this will be helpful. A lot of people say it's helpful is that I give you a copy of all the slides. We don't typically do this with our webinars here at VectorVest, but if you stick all the way to the end, I put together a PDF with a copy of all the slides. It's in color. I don't know if you'll want to print it out because it's in full color, but at least you'll have the slides that you can download, and you can let us know in the chat if you too would find that interesting. But I do ask you another thing. When we get to the Q&A at the very end, when we get to the Q&A, let me know to give you the slides, because after about an hour of teaching, man, I'm going to forget. So say, Brian, don't forget about the slides, and I'll just put the PDF into the handouts for you at the very end. But I do want to learn a little bit more about you before we start. What's been the hardest part for you about trading options? Now, some of you who said, David, typed in, I have limited real experience. If that's you, you might not have a hard part about trading options. You might have a hard part about learning options. You have 60 seconds. I like to keep the pace moving throughout the webinar. So I'm only going to give you 60 seconds to type in an answer to this question. So Frank says, I need to know when to cut losses. I've never traded them, says Diane. No experience, says Ken. Limited resources, says Wilma. Not very successful in the few trades I've done, says Theoru. And Neil says, I have no knowledge. Wow, they're flying through pretty quick. I'm going to try and read as many as possible. I don't know how to place the trade. Never traded options. Getting started. Not picking good trades. I'm intermediate. Direction of the market. Whew. All right, so I see a lot of things like picking the right stocks. I saw a couple of knowing when to exit, and there it is again, selecting the right option, not just the right stock, and then when to get in. All right, so you're definitely in the right spot based on the agenda that we looked at. Write this down, because this will be a theme as we go throughout the session. Your system, and everything we do here at VectorVest, we always have a system. Your system determines your success. And when I talk about system with options, we're going to be talking about when to be placing the trades, what stock and what type of option to trade, and then how to manage the trade. And you'll see that come back when we get to our 5-step system at the end. So let's do this. let's just dive in there. I told you we're going to build a strong foundation here at the beginning. Let's talk about how to focus on the most important. There's going to be a lot of terms with options. There's a lot of terms out there. As you gain more and more experience, you'll be introduced to more and more terms. But right now, there's going to be just a handful, just a few, let's just say a few, that you should focus on. We're going to be like these horses. We're going to be focused. A lot of people, when they start, they do get intimidated by all these terms. And especially if you go to your brokerage, like in your broker, and you log in and you're like, oh my goodness, what are all of these numbers? What does imp vol mean? Why are all these dates going across the top? It just kind of gets intimidating. What I want to do for you is simplify it right now. And I'm going to show you something that totally changed things for me as it pertains to options. It really simplified things for me. There's really only a couple things you really need to know just to understand options trades. And yes, I'm also including those quote unquote complex trades like condors and butterflies and things. All of those other trades, they're all just made up of calls and puts. That's it. So if you can understand the basics of what a call is and what a put is, you're going to be able to figure out not only just a call and a put, but all these other trades. And then from there, the only other two things you need to understand are that there's buyers and sellers. You can see there's 4 items there. We're going to put them in a grid. This will really help you understand. What I did and what I recommend you do is on a piece of paper, just draw out a 2x2 grid, and we're going to fill this in, and I want you to stick it on your desk and just look at it until you internalize what all these things mean. On the left-hand side, just write down calls and puts because those are the two things. Those are the 2 building blocks. Then across the top are the 2 things you could do. You could be a buyer or you could be a seller. When you're a buyer of something, you're going to have rights. Okay, so with options, you're going to have rights. Just like when you go to Walmart and you buy something, you have the right to expect it to work. You have the right to return it if it's broken. Buyers will have rights. Sellers will take on obligations. Let's see how this works with options here. Let's start off in this top right box. This will be the buyer of a call. For now, just understand that the buyer of a call, buyers have rights, so the buyer of a call has the right to buy a stock. We will continue to add to this as we go. Trust me, we're going to add more and more layers to this. But for now, just understand that the buyer of a call has the right to buy a stock, which means the seller of that call takes on obligations to sell the stock. You see how they go hand in hand. The buyer of a put is buying the right to sell a stock. The seller of the put is taking on obligations to buy the stock. And again, those two go hand in hand. Now here's a little tidbit that actually helps me understand this grid. At least it helped me when I stuck it on my desk. Is that I'm like, you know what? If I connect these 2 boxes with this arrow, it kind of reminds me of the stock market going higher or a stock going higher. And I said, those 2 boxes that it connects, the buyer buying a call and selling a put, those are actually bullish trades. And then the other 2 are bearish trades. I was like, that's kind of cool. And it helped me remember the difference between the 2 bullish ones and the 2 bearish ones. Let's now add more layers to your knowledge sandwich. And I'm going to start off by using an example of a type of a trade that all of us, or most of us, should be at least familiar with, which is just buying a stock. And I'm going to use Apple as an example. It doesn't matter the ticker symbol. It doesn't matter the dates. None of that matters. It's just understanding a concept here. The first one, I'm going to use just buying a stock. That way, when we use this same exact example as an option trade, it'll make more sense. Here's Apple. It's trading at $130 a share. In the chat box, do the quick math. How much would it cost to buy 100 shares? This is where we interact. Like, there's going to be a whole bunch of interactions in this first section. Cool. I just wanted to wait. Hey, Daryl. Daryl, you're back at another webinar. Welcome to another webinar, Daryl. Yeah, $13,000. $13,000 to buy 100 shares. Now, there's a couple of scenarios. Scenario number one is if Apple drops down to 125. I'll answer the first question, which is how much are your shares worth? Well, they're worth 12,500. But here's a key question. Do you have to sell? Ira, you were the first one in. Awesome. Nice work, Ira. Ira, Johnny, no. Exactly. You are the buyer. Remember, buyers have rights. As a buyer, you have the right to sell if you want or not sell. I mean, you have the right. You don't have to sell. You might want to, but you don't have to. And in this next example where the stock price rises to 140, now you're looking at $1,000 gain because you're at 14,000 that your shares are worth. But again, do you have to sell? No, you're right. You do not have to sell. It's your choice if you wanted to. What we're going to do now is I'm going to give you a little bit of a lay of the land of this profit and loss table, because we're going to use the same thing when we look at the option trades. Over on the left-hand side is what could happen to the stock's price. Now, it could go up, it could go down. Of course, it could go lower than 120, it could go higher than 140. These are just the 5 that I could fit on the slide. This next column is going to be your cost of the transaction. In our example here, this is an example of buying the stock, so this will be the initial cost of the 100 shares. This next column is going to be how much money we would get back when we closed the transaction. So in this case, how much we would get back if we sold back the shares at the price that's over here. And then this next column is just how much money we'd make or lose. This first column is the initial cost, and you all told me what it was. It was $13,000. But the key that I want to point out here is that this number does not change. Right? When you spend money to buy a stock, it doesn't change. The stock could go up or down, but the amount of money that you spent doesn't change. Now, this number over here will change. If Apple was still at 130 when you decided to sell it, you'd get your $13,000 back and leave you with no profit or loss. And of course, if Apple falls, you'd lose money. If Apple goes up, you'd make money. Here are the 2 key questions. When you buy a stock, what's your maximum profit? Let me know in the chat. What's your maximum profit if you bought a stock? How much money could you make? Yeah, Ira, you're the first one in. Yeah, unlimited. Yeah, I see somebody type into the chat box. Are we live, Brian? What is today's date? Today's date is September 7th in the year 2022. So it is the unlimited maximum profit. That is correct. What's the maximum risk? What's the most you could lose on this trade? Ira, I love that answer, Ira. Ira says the initial investment, 13,000, 13,000. Yeah. Deepak, Steven, Daryl, 13,000. That is correct. Now, of course, as an investor, it'd be extremely rare that you let a stock go to zero. Some people have done it, though. But you most likely have stops in place. But in reality, you're risking 13,000. Okay, now we have that under our belts. Now let's look at the exact same trade as an option trade. This is the same stock, right? You're bullish on Apple, but let's say you don't want to buy the 100 shares of Apple. Maybe you don't have $13,000, and even if you did, right? Maybe you did. Maybe you just don't want to spend $13,000 on one stock. But you still want to buy the right to buy Apple. So how do we buy the right to buy Apple? Well, if we think back to our little 2x2 grid, you're going to buy one call option. Because when you buy a call, that gives you the right to buy Apple. Okay, so it's going to give you the right to buy Apple in this example, we're specifying a price of 130. We'll talk more about that throughout the webinar. That's going to be called our strike price. Speaking of that, your one call is going to give you the right to buy 100 shares. It's called a contract, one call contract. If you did 2 contracts, it would control 200 shares. 3 contracts, 300 shares, and so on and so on. Okay? We're doing 1 in this example. 1, and at a certain price, that's called the strike price if you're taking notes. In our example, it's 130. By a certain date, that's the expiration date. We will talk about that later on, and I'll hint at it throughout the beginning part of the session. It costs something, right? You're not going to just be given the right to buy a stock. It's going to cost something. Your one call costs $3.65 per share. Remember what I said earlier. We did 1 contract. It controls 100 shares. 100 shares times $3.65 per share means that this costs $365 for our 1 contract. Okay, so if we did 2 contracts, it would just be double that, right? Here's our same 2 examples. Let's say you're holding this virtual piece of paper, right? You're holding this virtual piece of paper, and it's giving you the right to buy Apple at 130. Apple is now down to 125. Will you want to exercise your right to buy Apple at 130 if it's trading at 125? Just give me a quick yes or no. I see no, no, no. Amber, Rita, yeah, all no's coming through the box. Yep, no, 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 no. Exactly, right? You're not going to do that. Well, what if Apple goes up to 140? You're holding that virtual piece of paper, giving you the right to buy it at 130. Let me know your thoughts in the chat. Will you want to exercise your right to buy it? So far, I see yes, 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 yes. I see one person say no. I see I might. Oh, I see a couple of people know a little bit about options. They're like, well, no, I would just sell the option to somebody else. So Gerald said that, Stephen. Yeah. For now, let me just say the answer would be maybe. Right? Maybe. But you definitely could. I don't want to confuse you because you definitely could. You have that right. But the option is worth something to someone. That's the key thing. It has value. In fact, in this example, it's got $10 of value. Let's put that on our profit and loss chart here. Remember, we had the price over on the left going up or down of the stock. This is our initial cost of the transaction. Now, this time it's not $13,000, right? It is $365. $365. And again, that doesn't change. We spent $365. Now we just want to make it back, and then some, right? Over in the option value, if the stock is at $130 a share, and now we're going to go all the way to expiration here. Because remember, options have an expiration date. In this table, we're going to assume that we are at the expiration date and you have to make a decision. There's a thing called time value, which we're not going to get into right now, but I just want you to understand there's no more time value. We're at expiration, we have to make a decision. We're holding this virtual piece of paper that gives us the right to buy Apple at 130, and it's already at 130. Does it have any value? No, right? It has no value, and some people are confused at that. They're like, "Oh, what are you talking about?" I mean, it's got to have some value. I mean, you could buy Apple at 130. The analogy I give, it makes sense to me, maybe it'll make sense to you, is if you're holding a coupon that lets you get a Big Mac from McDonald's for $5. And you walk into McDonald's, you look up at the menu, and the Big Macs are selling for $5. If you told the person behind the counter that you want to exercise your coupon, they'd be like, okay, but Big Macs are $5. You don't need the coupon. So there's really no value to it. And the same thing would be true if Apple was trading at 125 or 120, because you would basically just buy the Big Mac at the cheaper price off the menu. You'd buy Apple at the cheaper price from the free market than using your your option. Now, if Apple went higher to 135, now think about this. You have a virtual piece of paper saying you have the right to buy Apple at 130, and then you could immediately go and sell Apple for 135. That's a $5 benefit for you or whoever is holding that virtual piece of paper, that option. So that's a $5 benefit times the 100 shares. That's why it has a value of 500 minus what you paid, leaving you with a profit of 135. Make sense so far? And then, of course, if it goes to 140, that's a $10 benefit. $10 times your 100 shares is a $1,000 value minus what you paid, leaving you with a $635 profit. Here's our key questions again. What is your maximum profit when you buy a call option? What's the maximum profit on this trade? Remember, Apple could go to 200 or 300. Yeah, Steven, you're the first one in. Steven says unlimited. Exactly. Yeah, it's unlimited. Infinite. Exactly. What's the most you're risking? What is your maximum risk? Peter, Steven, Rita. Yeah, $365 on this trade. That's a huge difference between that and $13,000, right? That's one of the cool things about the buying calls and buying puts is you've got still have the unlimited profit potential, but a much, much limited risk. Let's look at how this plays out in this example. So back in February of that year, and again, it doesn't matter the year, just this is a good looking stock. Apple was trading specifically at 129.73. It was a good looking stock. You might have wanted to buy it. It gapped up, continued to move higher. Maybe it had good earnings. I don't know. The stock continued to move higher. You would have been happy as an investor because you made 7.7% if you bought the stock. So it sounds good, right? Everybody would be happy with a 7.5% increase in a month. So if we put this into this table, if you bought 100 shares, you would have been up $1,000 after that month. That's your 7.7% increase. Well, how does that compare to our option trade? Well, if you did one contract, which is what we've been looking at, one contract, the cost is much less at $365. I'm going to skip over to this, which is our net profit. We walked away with a $700 gain. That's a 195% return on your risk. Much higher, right? Now, these people would look at that and be like, oh, one contract. Well, maybe I'll do three. Maybe I'll do three instead. If I did three contracts, then, yeah, I spent $1,000 now instead of the $365. But now I made $2,000. It's still 195% return because it cost you more. But a few things I want to point out before I get to the mystery row down here at the bottom. A few things that I want to talk about. Would you kind of grant me that 700 is kind of close to the 1,000? In the grand scheme of things, in the grand realm of the multiverse or whatever you want to think, 700 is pretty close to 1,000. Thank you, Frank. Frank, you're the first one in. So you got you as an investor, you're sitting there thinking, well, I could make similar money for much less of a risk. That seems like a no-brainer, right? And that's why some people say, well, instead of doing just one contract, I'll do three. But then, Frank's like, that's the leverage. And they're like, well, let me do 10 contracts. I'm still only risking $3,000 or $3,600, but now I can make $7,000. Remember, my promise to you earlier was if you learn how to use options the right way, it could help you possibly double your annual returns. And this is an example of how you could do that. If you mix in some options trades, I'm not saying become a full-time options trader. That'd be silly, right? No. Now watch, I'll have a full-time options trader on the webinar saying, what are you talking about? I'm a full-time options trader. No, we're not saying to stop buying and selling stocks. Right? You're still going to do that. But there's going to be some really good opportunities out there that make a lot of sense to say, instead of buying the stock, I'm going to just buy an option this time. And here, instead, you can swap out a $1,000 gain for a $2,000. Swap out the $1,000 gain for maybe a $7,000. Okay? And I saw a question come in saying, well, do you have to buy the stock to get to do this? No, that's the whole point of doing the option is instead of buying the stock, you're doing the option. At no point do you have to own the stock to see these gains, because you would just sell your option to somebody else. You just close the trade, sell the option to somebody else, and then you see the profit. I want to make one last point before we move on to the next section. For those of you who are trying to think of whether options make sense, think about it this way. Some of you trade stocks, I should say. And what is a common stop that a lot of people use? Like a 10 to 15% trailing stop, something like that, right? And if the stock gets sold when it hits their trailing stop, they're like, oh, that stinks. And they're upset, but they move on. Well, what if you did, if you had that 10% trailing stop on this? I'm just going to use 10% to make the math pretty simple. You're basically saying if I did the stock trade and I lose 10%, I'm going to walk away with a loss of $1,297, right? Well, if you're willing to lose $1,297 on that stock trade, that just makes sense to say, well, why don't I just do the option trade and only risk $365? That's the maximum loss. Now, if we had more time, I will let you know that we do teach a 6-module course called the Options JumpStarter, which goes through all the nooks and crannies of the details of the system. But we don't have time to get into that. But in that course, the way that we teach it is you never lose the full amount. But even if you did, right? Even if you didn't follow the rules and you lost all 365, that's still less than the 1297, and you're still looking to get near the same amount of gain. Okay? Let me ask you this. If you had this working, what would be the impact? You have 30 seconds to type something into the chat box. If you could, let me phrase it a different way. If you could swap out a $1,000 gain for a $2,000 gain, or if you could swap out 1,000 for a 7 every once in a while throughout the year, what would be the impact for you? And again, I'm not saying to become a full-time options trader. I'm just saying kind of mix things in here a little bit. Peter says, it'd be sweet. It'd be exponential, says Gerald. Increase dramatically my account, says Rita. Joe says, I'd be able to protect capital. Tremendous, says Robert. Pay off some bills, says Amber. Enhance income and freedom, says Ira. Change for the better, says Frank. Exactly. So I feel part of my job today is to be a coach, right? A coach in multiple ways, not just coaching you on options, but coaching you on your mindset. So one of the shifts to make is to say, well, instead of just doing stocks, have the mindset of, you know what? I want to mix in some options. So if you are ready for that, if you think that is a shift that you should make, in the chat, you're either going to type in, I just want to do stocks, Brian, or type in the word mix. Like if you want to mix some options with your stocks, just type in mix. Wow, it's kind of flowing through really fast. Amber, Frank, Joe, Stephen, Madeline, Deepak, Anil, David, all mixes. Awesome. Yeah, just start to mix some of them in. That's how you could possibly double your annual returns, by mixing some of these options in there. Now let's add to that. All right, we're going to add to that because now you want to mix in some option trades, but you got to know how to trade them correctly, and that's what the next couple of sections of today's webinar are going to be all about. Most people see those big gains like, oh my goodness, 195%, and they just go out there and start buying options. Left and right. I'm going to buy this one. I'm going to buy this one. I'm going to buy this one. No, don't do that. You want to do it right. So you want to align your trades to give yourself the highest chance for success. I like to think of it like playing the match game. And I remember when I was a kid, my brother and I would sit in the living room and we'd flip over those memory cards, those little cards, and we try to make matches. Well, it's similar to this, right? You come up here, and if you're flipping over your cards and one of them says, hey, the market's going up, well, the next card that you flip over needs to be, the stock's going up, and then you're going to pick a bullish trade. That's a match. And when we're talking about bullish trades in today's webinar, we're talking about buying a call. And then just the reverse, the market going down, stock going down, bearish option trade. Okay, the mistake some people make is they're like, oh, well, I know the market's going down right now, but this stock is so hot right now, I'm going to buy a call on it. Well, that's a mismatch, and you're setting yourself up for failure. Okay, then that's kind of what a lot of people do is they'll see stocks like NVIDIA. And by the way, I'm going to show you a few stocks here. They're in the top 5 stocks with the most options volume. I'm not just picking these at random. These are the stocks that your friends, your neighbors, your buddies, they're out there buying and selling options on. They're the most heavily traded stocks for options. So people will go out there and they'll see NVIDIA. Be like, oh, wow, NVIDIA. Look at this stock. It's going up. And I'm going to buy a call. But then after they buy the call, it goes down. And then AMD, it's going higher. I'm going to buy a call. And it goes down. Same thing, Tesla. Tesla, I think the last time I checked was the number 1 traded stock for options. And it too moved lower. And when stocks go down like this after you buy a call, you're obviously going to lose money. I shouldn't say obviously because I know a lot of you are still kind of learning this right now. I'll just say this. You're going to lose money. You might say, I thought I did things right, but you lost. And Peter's like, man, you're speaking to me right now. Yeah, a lot of people do. You're not alone, Peter. Don't feel like you're ever alone. But we got to fix this. Because when you're doing this, it gets frustrating, right? And you end up not knowing when to place a trade or even which stock to trade. Now, why does this happen? What's a big reason this happens? It's because of this. Here's the overall market. At the same time I showed you those stock charts, the market had already started curling over and moving down. That's number 1. If the market is moving down like this, you don't buy calls. In fact, here at VectorVest, and I believe a lot of you on today's webinar actually use VectorVest, so you're familiar with some of the terms I'm going to use. VectorVest signaled a confirmed down call on the market right here. And when the market moves down, it pulls most stocks down with it. And if you don't pay attention to the market's direction, trades, especially option trades, because remember, option trades have an expiration date, so you got to be right by a certain date. More times than not, those option trades aren't going to work out. Instead, you want to give yourself an opportunity for some explosive gains. And to do that, you're going to need to pay attention to the market's trend, play that match game, and follow the trend. What I'm going to do here, this is the market timing graph, except I brought it more to the current date. I might have missed it by a few days because I took this probably Friday of last week. But you can see here, August 2022, we're really close to today's date. So around here we had that confirmed down call and the market moved lower. Let's look at a couple of examples. Here was that confirmed down call on November 22nd. Now, our system generated confirmed down call. You're not going to be buying a call, so instead, let's look to buy a put. Okay, so don't go out there and be buying calls on NVIDIA and AMD and Tesla and other stocks that might still be going up. You're going to be thinking, all right, let me buy some puts. You could either buy puts on indices, like the SPY as protection, and Jim focuses on that a lot in his retirement classes. But you can also buy puts on individual stocks that are bad stocks, likely to move lower. One of our top bearish searches inside of VectorVest, this one happens to be Gravity, and we tweaked it a little bit in our coaching program. But I'm not going to go through all the details, but I just want to show you the stock chart so you have an idea what a bad stock looks like. So this search found Beyond Meat. And this is what a bad stock looks like. I mean, it had horrible earnings. Like earnings went from positive to negative and just dropping off a cliff. And it had gapped lower here, it had gapped lower here, and most importantly, it continued to move lower. So it's below a level of support, it's moving down, it's in a big downtrend. These are the types of stocks that you want to buy puts on in down markets. Okay? I'm going to head over to our options program because I want to show you what the trade looks like. I don't want you to feel like you need our options program to do these types of trades. I mean, you could just go to your broker and set these things up. In the next section, we're going to talk more about setting up the trade. But for now, let's just focus on the results. Okay, we'll talk more about the setup in just a minute of like where you should do your expiration, where you should do the strike. But for now, just understand in this example, we did a slightly, it's called in the money put option. We chose an expiration date that was about 90 days away in this example. That's kind of, I'll give you a hint, that's in the sweet spot of like 60 to 90 days that we like. This trade would have cost $10 per share. That's what you would see on with your broker. It's a $10 premium. But remember, let's go back to what we learned earlier. One contract controls 100 shares. 100 shares times $10 per share means that this option trade would cost $1,000. Okay, so we did one contract. It would cost $1,000. After about a week, a little over a week, this option trade hit the profit objective and you gained 85%. Okay? Now again, I wish we had a little bit more time to talk about all the ins and outs of exits, but in that 6-module course, we talk exactly where to set these profit objectives. But you walked away hitting your profit objective here. Now, there are some places out there that will talk about, oh, let's look at this big number over here, 1,805. Well, in this example, I tried to be more realistic and just say, oh, our profit objective is here. We walked away with 85%. Not, what is that? What would that be? 180%. All right, so in this example, it was an $850 gain in about a week and a half. Okay, that was just trading one contract. Obviously, if you did 2 contracts, you'd walk away with double that. And that's profit. Okay? You made back your $1,000 that you spent, and that was on top of that. Okay, so now let's look at the flip side. The market had continued to move lower. Some of our indicators here at VectorVest were hitting bottoming levels and actually rebounding off of those bottoming levels. We have a buy to sell ratio, we have an MTI that indicates an oversold market. And on this date, July 21st, we also had a green light. And that's a great thing to look at to try to catch these explosive phases off the bottoms. Granted, there were probably a couple of green lights here and back here as well. But this, I wanted to grab one. We had a good combination of bottoming levels in our indicators as well as the green light. That's when we're going to go look for those stocks that are rising. Now, keep in mind, you're going to probably find some stocks that were beaten down because the market was beaten down like this. So we're going to go run a search that finds some good stocks. Here in VectorVest, a good stock means a high RV and a high RS. I'm not going to go through all the details of the search, but they're finding really good quality stocks. Here, it found CELH was one of the candidates. Now, you might look at this graph and be like, oh, that's not very pretty. Well, if I were, in the resolution that I had for this screen, I couldn't show you all the past before August 2021, but there was a nice uptrend. But this is what happens in a down market. Good stocks get beaten down. But when you ran that search, this stock was breaking above resistance. It had rebounded and started to go back up, and it's full candle above that resistance. It's a great candidate. So let's look at the trade setup. And again, don't get focused on the exact trade setup here. Let's look at the results of when you do it right. This one we happen to buy, and it's called an at the money call option, which means the strike price is right near where the stock's price is. We chose an expiration, again, about 90 days away. And in this example, it would cost $13.20 per share, one contract. So that's 100 times 13.20 means that this would have cost $1,320. Once again, this was about 2 weeks later. The profit target was hit again, locking in a gain of $1,400 in just about 2 weeks, almost 2 weeks. I want to put it another way. The stock during that time, in about 2 weeks, this stock went up 21%. Now, hey, if you're a stock trader and you just made 21% in 2 weeks, congratulations. That's great. But you got 21%. But this is one of those times where you're like, you know what? I definitely would have liked 107% better. And when you start to mix in 100% versus 20, that's a 5x return. If you start to mix those in, that's how you could possibly double your annual returns. What we want to do is not do it wrong, right? When there's no match, when you get a good stock in a down market, we want to do it right where everything's lined up. This is an example of a bad stock in a down market. So you bought a put. This was an example of a good stock in an up market. So you hopefully can also see that you can make money in up and down markets. Okay? That's an important thing, is when the market's going down, you don't just have to sit there and watch your profits go away. You can start to profit in down markets. So very quick, when you align your trades, do you feel you have a competitive advantage? Remember, there's all these other people out there who are just buying options. These novice option traders. Now, I know you might be saying, well, but I'm still a novice. No, not anymore. You're learning how to do it the right way. Now you've got this knowledge. Would you say that you've got a competitive advantage over others? Because now you know that you've got to be mixing. Yeah, Frank's like, yes. Yeah. Amber's, yes, I got a competitive advantage. So I want you to, make a decision. Hopefully you're going to choose the second one, which is align. I'll just ask you very quickly in the chat, do you want to buy anytime or would you rather align? So if you want to align, so just type align. I'm seeing aligns fly through in my chat box. Ira, Johnny, Peter, Madeline. Frank's like, align, of course. Exactly. And by aligning your trades and placing them at the right time, you give yourself the highest chance for success. Okay, and that's going to allow you to take advantage of that leverage. All right, well, we can't stop there, right? We can't stop there. We got to talk about setting up these trades. So if you're sitting down, just get the blood flowing again. If you looked away, shame on you, right? Like from Game of Thrones, we're like, shame. Hey, don't look away, don't multitask, come on back. Because now that you know that you want to start using options, you said that at the beginning, you want to mix some in. And you just said you want to align your trades. You got to know how to set up the trade correctly. Because a lot of people learn the basics of what a call is and what a put is. But then they don't pick the right strike or the right expiration. And that could have a big impact on your success or failure. And obviously you want to be successful. You want to be like a chess player where you're thinking in advance. Before you do anything, you're thinking a couple of moves ahead. This is an example at Home Depot. Again, it doesn't matter the year or even the stock, but this is an example of a stock that was going higher. And what a lot of people do is they buy a call, but they set their strike price way up here. Way up here. Because remember, it gives you the right to buy Home Depot. And they're like, I'll just buy this call option. Brian said that if I buy a call option, I can make millions of dollars. Well, that's not what I said. Right? But they're like, I can make 195%. Well, why do they set the strike price way up here? Well, because this one only cost $47. Remember our other examples where options cost like $1,300 or $1,000 or a few hundred? Well, they're like, this one only cost me $47. They're treating it like the lottery. They're saying, I'll just spend $47 and just hope that I hit a big winner. All right, but what are the chances that Home Depot is going to get up to here, especially considering there's an expiration date coming up? Typically what happens is the stock doesn't have enough time to do what you want. It might go up, like this stock went up to here from back here, but it doesn't go up enough and your option expires worthless. We call it like boxer syndrome. You know, a boxer who gets kind of jabbed in the face? You know, one jab doesn't knock him out, two jabs doesn't knock him out, but if you keep getting jabbed in the face, eventually that guy gets knocked out. Your portfolio, in other words, it would suffer death by 1,000 paper cuts. You slowly bleed your portfolio out. Instead, what you want to do is you want to put probability on your side. Okay, and that is done by how you set up your option trade from the beginning. To teach you how to set them up correctly from the beginning, what I'm going to show you is the two core problems that people do. And by learning those core problems, you're going to be able to then say, well, I'll just do the opposite of that. All right, I'll just flip it around. Let's look at a thing called option time decay. Now, I learned just a few months ago that this term can actually be confusing. I always thought, oh, time decay, that kind of makes sense. Another way to look at this or think about it, instead of thinking time decay, think of it as the decay of the value of your option, like your option value decay. Like this is the value of your option decaying over time. Okay, maybe that's a better way to say it. So if you look down here, this is the number of days until expiration. Number of days till expiration. And over here, this is the price, or in other words, the value of your option. The key thing here are these next 2 points. Number one, it would take 135 days for that option to lose half of its value. Now here's the most important point. In the last 45 days, it's going to lose the other half. So if you have been buying options, like buying a call, buying a put, and you're choosing an expiration date that has less than 45 days, you're setting yourself up for failure. Here's a look at a visual look of that. A lot of people who do it wrong choose expiration dates here. Like, picture the trade date being right here. I know I got all these other candles, but let's just picture you're placing the trade here. They choose an expiration date here or here. This is what it looks like. It's almost like tying a cinder block around your ankles and asking you to swim in the pool. You're not going to be able to stay afloat. The value of your option can't overcome the decay. So you want to give yourself enough time to be right. And we like 60 to 90 days out, not in the 45-day range. Now the second problem is where people pick their strike prices. And the biggest thing is they just pick strike prices that are too far away because they're cheap. And in this example, when I say too far away for a call, they pick strike prices way above the stock's price because they're cheaper. But just understand, probability is a lot lower when you do that. Let's look at how to do it wrong and then how to do it right. The thing I want you to understand here is I'm going to show you two trades that are placed on the exact same day on the exact same stock. Scenario number one, the trade gets placed here. This was the trade date back here. Expiration date was just a month away. Maybe it would have been the third week of April. It was about a month and a half. And the strike price is too high. The result? Maximum loss of $460. Paper cut number one. Jab number one. Scenario number two. Exact same stock. Exact same trade date. Except expiration is now another month away. So now we're in the 60 to 90 day window. Strike price is basically right near the stock's price, like at the money. This one happens to be a little bit in the money. It might cost you a little bit more, but you have a higher probability of success, and in fact you walked away. Now, granted, this went all the way to expiration. I just didn't have the time to figure out where the profit objective was. Now, like I said, I don't want to say something earlier in the webinar and then do the exact same thing that I mocked. All right, but this says a gain of $8,000. We're not going to hold these trades to expiration, but that would be the impact if you did. In that 6-module course, we would teach you, all right, well, you hit your profit objective most likely in here, and let's just say it was around the $3,000 to $4,000 range. I mean, that's still pretty good, right? 3,000 to 4,000 return. All right. So hopefully you're going to say, well, I'm going to, instead of doing no rules, I want to use those high probability rules. Okay, picking those strikes and those expiration dates in those windows to give me a high probability of success. Now, today's been all about building your option trading system to possibly double your annual returns. I want to walk you through the 5-step system that we use here at VectorVest. Now, there's 5 pieces, and a lot of you do use VectorVest, so some of these things will sound familiar. We always start with market direction, as we talked about today. A lot of people ignore that. Don't ignore that. Okay, so we're going to start with market direction and look for signals that the market is either topping and moving lower or bottoming and moving higher. From there, then you can start to look for stocks. And you saw today, I showed you a couple of searches that we run. That's basically the next step. Once you find the market direction, you're going to go look for good stocks. I shouldn't say, I don't want to misuse the word good. Appropriate stocks for that market direction. And then from there, you're going to say, all right, well, now I have a list of stocks. Which ones make the best option candidates? And this one we didn't have as much time to get into today, but you're going to be looking for things such as open interest. You want to make sure that the option, not only you're going to pick the right option, like whether you're going to buy or call or a put, but you're going to make sure they have the right open interest, things like that. From there, we talked a little bit about trade setup as far as strikes and expiration. But the things we didn't have time to get into today would be just to make sure it's got the proper risk to reward ratio and setting up the trade that way. And you might have to say, well, I'm not going to pick this one. I'm going to pick this one because it has a better risk to reward. So that's part of the trade setup. And of course, the trade management. This is where a lot of people fail. We didn't have a lot of time to get into this one today, but you're going to set profit objectives from the beginning. Time exits, you're going to get out of trades before expiration, and you're going to have stops in place. So I want to ask you this, just very quickly. I know I'm looking at my clock. We're nearing our 1 hour spot here. Give yourself a star. Let me get my pen. If you feel pretty good about something. Now, if you use VectorVest, I bet a lot of you might say, well, I got market direction pretty good. I could determine tops and bottoms pretty good. And I'm actually pretty good at finding good stocks, and I'm pretty good at finding bad stocks. Maybe you'll give yourself a star there. I don't know. But if you have something that you're not good at or you don't feel comfortable or confident with, just give it an X. Maybe trade management, maybe trade setup or option selection. I don't know. You have 10 seconds. Don't overthink it. Give yourself a star or an X. And then as soon as you are done, in the chat, what did you learn? Did you have a 3 out of 5, a 1 out of 5, a 5 out of 5? How many stars do you have? Now David flipped it around. He said, I've got 4 X's. Frank says I got 3 out of 5. Theroux says I got 1. I got Joe says 2. Amber says 2. Steven says 3. 2 says Anil. Peter's like, this is too important for me. I need to learn more. Yeah, so the key is we want to get you to a spot where you've got stars all the way down, because that's basically a complete system. And you showed up today most likely because you didn't know where to start, right? You knew options could help you, but you didn't know where to start. You felt confused or intimidated by all the terms. Maybe you've tried options and you've taken loss after loss. But options can help you leverage your money and grow your portfolio at a faster pace. Why ever you showed up, I hope you see that your system is the thing that determines your success, and that you saw today it's possible to grow your portfolio much faster if you start to mix in some options. That you could you should be aligning your trades, that you should be setting them up as high probability trades using high probability rules. And I bet the answer to this question, where it says, do you see how powerful options can be for you when done right? I'm guessing that you're probably saying, well, yes, definitely. Yeah, I see a whole bunch. I see Amber's like, yes, with a big exclamation point at the end. So the obvious question is probably like, all right, well, how can I get the system going right now, get results as quickly as possible? Because, everybody's got a choice. I mean, we're running up on the 1 hour mark of today's webinar, and you might say, you know what? I'm going to choose to take what I learned in today's webinar. Hopefully you learned a lot in today's webinar, but you're going to say, I'm going to go try it on my own. But the downside of doing that is you're going to learn by trial and error, which when you do it by trial and error, that's when you can make mistakes. And as the picture there illustrates, mistakes can be painful. Instead, we put together this 6-module course, which I've mentioned a few times before. It should be no surprise, right? We put together this 6-module course to help bypass all those mistakes, because we've been doing this for years and years and years, and we kind of know the mistakes that people make, and we're going to help you bypass those and help you get results quickly. And that's why we put together this 6-module course. Now, it says 6 weeks there, because we will work with you for 6 weeks, week by week, but you have access to all the modules right up front. You can go through them this weekend if you wanted to. This course called the Options JumpStarter is going to show you how to find, set up, and manage the right option trade at the right time to make money, whether the market's going up or down. Okay, so if you're new to options or you've struggled with them in the past, I mean, this is the course for you. Right, we put it together for people who want a system to trade options the right way. Like Roger here. Roger, he wrote us a note saying that he had recently quasi-retired after leaving his company. He took the course to learn basic strategies to reduce risk and gain better odds, and he loved it. He said, if you're like me and you've never traded options before, I would stress that you should not make a move until you've completed this course. Emotionally, I'd say that when I do enter my trades, I do so with much more confidence. Psychologically, I feel the outcome of my trades will be positive and I'll be making money, and that puts me in a great psychological state, because he now knows that options don't have to be a gamble. So let me just walk you through the modules. In module 1, it's a complete foundation building. So we spend actually a full hour on building a strong foundation. Right, so that way you get complete clarity on how options work. Then the next 2 modules are all about trade setup for calls and puts. Because with calls, you want to know how to make money when the market is exploding up and make money and profit when the market's going higher. And then the flip side is you want to make money when the market is falling. And that's where we show you how to use puts and set them up correctly. Once you understand how the options work, then it's like, all right, now let's talk about how to select the right trade, how to select the right stock, how to match that stock with the market, and make sure that that stock is the best option candidate. So that's all going to be in module 4. Now, once you have your option candidate, it's all about trade management. All right, this is where we're going to be talking about exactly what you need to be doing after you've already you know how to set up the trade, you know how to pick the trade. This is all about trade management, so that way you know how to exit the trade, right? Then we don't just stop there, because that's almost like teaching a little bit of theory, like this is how it should work. We're going to say, all right, let's go all the way to execution and get you to the broker. We're going to show you how to place the trades. Okay, how to enter a trade, how to close a trade, how to set those profit objectives, show with a broker. There's a bonus module on covered calls. Jim Penna has an entire system that he uses with his retirees on how to generate income each month using covered calls. So you get that bonus module as well. Doug here said, hey, I wish I had taken this course 20 years ago. It gives you the basics of puts and calls with some simple rules and strategies that you can understand and implement very easily. The bonus session on covered calls alone makes the course worth it. All right. Now, some of you watching today's webinar, you get another bonus because you don't have VectorVest right now, we're going to give you access to VectorVest. Okay, so that only applies if you don't have VectorVest right now. But if you don't, you get 60 days of access to it. We're going to have 2 packages that you could purchase. One of them is called the Mastery Package, and that's where you're going to get 6 live sessions with us. That's where we're going to get together with you each week and make sure that you are on target, that you understand all the action items, that you got a 100% on the quiz, and we help you implement all of the modules from beginning to end. All right. Now, of course, if you can't make a session, it's all going to be recorded. You can even submit questions in advance because we're going to give you a private email address. So you get all these things are what you get. Value is over $2,000. We have 2 options for you, and I told you that you're going to get actually a great deal today, not just this $495. All right. So we have 2 packages. You could either choose the self-study or the mastery. If you register for the mastery package, it's by far the best value. You're not only going to get the full course, the bonus module, the access to the software, you also get the bonus modules taught live. You're going to get the 6 live mastery sessions. And if you order before the end of the webinar, you get it for the same price as the self-study. So it just makes really total sense to do the mastery package because it's the same price as the self-study. So you just got to go to VectorVest.com/jumpstart. We're going to put that link into the chat for you. Jim's already done it for you, VectorVest.com/jumpstart. Thank you, Jim. So just go to VectorVest.com/jumpstart and get yourself registered. When you go there, you're going to see a big button that says register, and then it'll bring you down, and you'll see the mastery package that it's the same price of $295. So just select that one. I saw in the chat, Peter's like, I am all in tonight on the mastery package. Thank you for sharing that, Peter. Keep in mind also that this course is 100% money back guarantee. We have confidence level high that this course you're going to love. But we do have a 100% money back guarantee. You can go through the entire course. If you're not satisfied that we taught you how to profit using options, you can get all your money back. It's no risk. But we do ask that you do the work because we know if you do the work, you're going to see the results. All right? Like David saw the results. He said the Options JumpStarter was the perfect course for the beginner. It taught me all the basics that I was looking for. Great staff, great course. Financially, I'm up $100,000, tenfold compared to buying and holding stock in a very short time. Leverage is wonderful. I would recommend this course for everyone that wants to live comfortably and have the ability to retire. This course and VectorVest are a blessing. All right, now we can't guarantee that you'll make $100,000, but you see that it is possible, right? Now we talk about possibly doubling your annual returns. Now David did it tenfold. Just ask yourself, what would it cost you to do nothing, to learn by trial and error, to suffer the paper cuts, to suffer the jabs? How much money would you miss out on if you didn't do this? All right, and then say, well, what if I did this and it started to work for me? How would your life be different? So again, if you order before the end of today's session, you get the mastery package for only $295. Now, if you wait, the price will go back up to $495, which is still a great price for the mastery package. That's still a discount. The price will go up again early next week, and then registration closes at the beginning of the week. I believe Monday or Tuesday of next week, registration will close. So go to VectorVest.com/jumpstart and get yourself registered today. The page will look something like this with a big button that says register today. Once you click on that big register button, you'll see a section down below where there's 2 choices, self-study and mastery. Just choose the mastery package. All right, so don't wait. Now's the best time. A couple of quick notes. That $295 price is lower than the elite pricing. I believe if you're an elite member of VectorVest, elite members get it for $397.50. So this is lower than that. But once the price goes up after today's webinar and it goes to $495, the elite price is lower than that. But you might as well do it now and get the discounted rate. And now some of you have taken this course before. We do have a refresher rate, which we would have emailed you about. I believe, I don't remember the price. I think it's $95 or $190, one of those. It might be $195, one of those two. But call our team. It might be 95, but call our team if you have taken the JumpStarter and you want to get back in and go through the mastery sessions again with Jim. But you got to call our office. Jim will put the phone number in the chat for you. Okay? So just call that number and just say, hey, I took the JumpStarter. I'd like to get the refresher rate for the JumpStarter, and they can take care of it for you over the phone. All right? Before I show you the schedule and go into the Q&A, and I know some of you are asking for the PDF, I'll do that in just a moment. But let me just ask you really quick. If you are in, type in those two words, I'm in. Just type I'm in. And that way Jim knows and I know who is joining us in this class. Those of you who are in, like the first ones that I saw type in, Tim, Anil, Amber, Hyman, all say I'm in. Be sure to check your email. We're streaming this on YouTube as well. I'm going to type in the chat box over there, the link. There we go. Check your email, because it'll have an email with all the dates, all the times, all the directions, all the links, everything you need. Wow, I look away for a second, I come back and I see a whole bunch more I'm ins, like David, Daryl, Joe, Deepak, Shamarki, Forrest, Ira, Joe. Welcome to all of you. Now I see questions about when are the sessions. Anil says, I'm in Sydney. When are the sessions? Isaac says, I'm in. Well, here's the dates and the times of the live sessions. The first live session is the 21st of September. So think about that. That is what, 2 weeks from today? If you get in today, you have access to the training materials right now. You get in there. You have 2 weeks to go through the material. Now, of course, you have 12 months of access to the material. I don't want you to think that you only have 2 weeks. But you have the next 2 weeks to go through the material, take the quizzes, do the homework, write down questions, email in some questions to us. And then that way, starting the 21st, you're ready to ask questions based on where you need help. Right? So you basically, you get super prepared before those live sessions with us. All right, so it's VectorVest.com/jumpstart. The sessions are Wednesdays at 11 a.m. Okay? All right, now before I get to the Q&A, I do appreciate that you guys and gals had mentioned that to give you the slides, I'm going to put them into the chat. Right above the chat box, there's a little handouts area. Now, if you are listening on YouTube, to get the slides, I don't have a way to drop them into the YouTube chat. YouTube doesn't allow that. So if you're on YouTube, you can either call or email our office and just say, hey, can I get the slides from this session? And they'll shoot them over to you. Okay? All right, so right above where you're typing to me, it's a PDF of the slides. You can check it out. So all of you who are in, fantastic. Welcome to the class. I'm going to stick around, answer a bunch of questions. All right? And if you have a question, let us know in the chat. Now, if you have already typed in your question, and I'll let you know now, it is off my screen. So Ian just said, I'm in for the mastery package. Awesome, Ian. Welcome aboard. Good night, Peter. See you in class. Ken says, I'm in. Welcome to you, Ken. Great to have you in class. Yeah, some of the cool things about the course are you get not only the modules right away, you can even, if you wanted to. And let me show you. Let me get in here. This is what the course looks like. Once you log into the course, it'll look like this. It's the Options JumpStarter Mastery Package. You see all the modules on the left-hand side. So if I open up Module 1, you see there's the presentation. See, Module 1 is actually an hour and 25 minutes. We also taught this live at one point we have I'll call it a classroom, but a training center. Sorry, I blanked on the word. We have a training center here. but we recorded that as well. So you get to hear it a couple of different ways. Then each module has homework or an assignment. We put together a video helping you do the assignment. So that's here as well. There's the test that you could take just to test out your knowledge. And then this is the recording of the mastery session from the last class that we did. So if you could kind of get a little head start and listen in to what a mastery session is like. And as the modules go on and as the weeks go on, Jim's going to be able to get in there and show you real-time broker, like real-time option chains, and get in there, and maybe he'll even decide to place a trade depending on what's going on in the market in those mastery sessions. That's one of the reasons why we try to have them during the day when the market is open. So that way you could feel what it's like to be doing this when the market is open. All right. And I see Anil says, I'd love to attend, but these sessions are at 1 a.m. What I would say is, hey, whether they're at 1 a.m. or sometimes they're right in the middle of the day and people still can't attend. The great thing about that, Anil, is you can submit questions in advance to a private email address that we're going to give you. And you could specifically say in your email, please answer this during the mastery session. That way, let's say Jim gets that email. He'll say, okay, I need to make sure that I answer this during the mastery session because I know Anil is going to watch the recording and listen for his answer. So it's almost like you're there live, Anil, but you're just hearing Jim answer your question on the recording. So that is an option for you. All right, now if I come back over to the class over here, so that is module 1. The same thing is similar to module 2 through 6. And then you come down here, you see there's a couple of bonus modules. Then you can see another bonus with broker videos. We got videos for E-Trade, interactive brokers. We've got Think or Swim. That way, even if you have a different broker like Schwab or Fidelity, a lot of the tools are the same for those different brokers. All right, and then you come down here to the resources area, and that's where you're going to be able to get all the slides for all those sessions. There's also a checklist. Now, I'm not sure why it's not loading, probably because I had this sitting open all day. Oh, there we go. So we got like a trade checklist that you could download. We actually recommend that you download it and use it. Okay. And then if you're still thinking about joining, just go to VectorVest.com/jumpstart, and you'll see a page that looks just like this. Once you're here, there's a big button that says register today. When you click on that, you'll see there's the webinar special of $295, and you would hit mastery package registration. And when you do that, you're brought to the page for the $295 pricing. All right. So let me go back over to the chat and see if I missed any questions. It looks like Jim's been answering some questions for us. It looks like I got a note over here that from Roger saying, I think the alumni rate is $195. Yep, you might be right there, Roger. Thank you for that heads up. It's still a discount, right, Roger? All right, so I see a question that had come in is from Evgeny. Says, how much money on the trading account do we need to have to be able to practice trades in real time during these training sessions? All right, so I'll answer that a couple of different ways. Number one is some brokers allow you to set up a paper trading account. For example, Think or Swim, which is through TD Ameritrade, which I believe was bought out by Schwab. I know it gets kind of confusing, but they have a paper trading feature. So then you don't have to have any funds in there. You could just paper trade. As far as a funded account, for this, really just whatever the broker minimum is. All right, now, because you're not doing really advanced option trades, you're just doing like buying a call and buying a put. All right, now you probably would just have to like set up your account to trade options and just check a box for that. But do you remember seeing the trade I showed earlier, Evgeny? It was the very first one in today's webinar. Do you remember how much that one cost? Do you remember that first trade? The example. Yeah, it was less than $400, right? That's how, that's an example of how little you might need to place option trades. Now, I did show some other ones where you needed the trade was $1,000 or 1,300 was another example. So that kind of gives you an example of the size account to place that one trade. Now, of course, we don't recommend that you put all of your money into one trade. So ideally, it would be nice to have more than that in your account. That way you're not just counting on that one trade to make money. You know what I mean? So, $5,000 would be, I say, really would be a minimum. More than that would be better. Okay? Let's see. Joe says, if we can't make the live course on Wednesdays, we have access to the recorded live classes. Oh, definitely, Joe. Yeah, I was showing that just a moment ago. So, Joe, take a look over here. In fact, Joe, if you purchase the course right now and you go in here, you'll be able to see the mastery session from the prior class that we did. And you could watch that mastery session and kind of see what they're like. Now, of course, we might tweak things, and it all depends on the questions that come in each session. But you could watch the recording from the last class. And then once yours is done, give us less than 24 hours usually, and we will overwrite the one that's there with yours. So, yep, you'll have access to the recordings. All right. Odie says, when will it start? Well, you have access right now. As soon as you sign up, you can see it. I'm in here. You have access to all the materials. So if you go to VectorVest.com/jumpstart, you can get in there and start going through the training right now. The live sessions, so if I go back over to here, the live sessions start September 21st. So you would have a couple of weeks to start going through the material, the 6 weeks of these live sessions, and you have 12 months of access to the material. All right. Let me scan for some more questions. Roger says the $195 refresher price is a great price. Rogers took the class a while back, and he's been now trading calls and puts, I believe, too, right, Roger? I'm sorry, I'm reading Roger's comment in the chat over on YouTube. Roger said, when I took the course 3 years ago, it was full price that he paid for the course, not the discounted rate that we were looking at here. So I wish I could copy and paste his comment so you could see it. But he said, I had all of $110 in my account. He said, I paid for the course before the course was over. Oh, sorry. Roger typed in. He said, I had all of $1,100 in my account. He left off a zero. He said, I had all of $1,100 in my account, and I paid for the course before it was over. And then he said, I tripled my account within a few months. Wow, Roger. Congrats. I know you had sent me a survey. I call it a survey, but a feedback form from the course, and you had all that in there. So congratulations. I know we congratulate you every week on your wins, but congrats again. All right, I'm sorry. Let me look back over at the question log. All right, so once you sign up, I saw some questions about, like from Evgeny, says all the information will be sent to my email. Yes. So a couple of things. Check your junk or your spam folder. If you don't see, well, first off, if it's not in your inbox, check your junk or your spam folder. If you don't see it there, contact our office, because there's a chance that we have your email wrong. Sometimes people type in your email wrong, like miss a letter or something. or we just have an old email on file. So there's not much Jim and I can do on the webinar. You'd have to call our office using the phone number that Jim put into the chat to get your email checked. And if you get them on the phone, I shouldn't say if, when you get them on the phone, they can manually send you the email. All right, so Amber says, I just bought the course. Do I need to download the software next? Well, first off, Amber, welcome aboard. Welcome to the class. You could, yeah, why not, right? Download the software and get it installed on your computer. It only takes a couple of minutes. If you're brand new to VectorVest, you'll probably get an email that says something like, welcome to VectorVest, or something like that. I don't remember exactly what the subject line says, but there's a link in it to download VectorVest. It'll take 60 seconds or less, and then you could start playing around in the software. Now, you could do that, but I don't want you to kind of get down a rabbit hole and start clicking around and trying to figure everything out in the software. It might just be best to go through the course module by module. That way, in the course, Jim and I, in the training, will point you to the parts of the software that are pertinent to the thing we're teaching you. All right, that way you don't try to learn like every part of the software, and because there's a lot of tabs and a lot of things you could do. And then David says, what's the link for the training? Okay, so once you purchase the course, the link will be in the email, but I'm going to keep it simple for you. If you go to, now this is after you purchase the course, if you go to university.vectorvest.com, as you can see there on my screen, there's no W's, right? No www. Just go to university.vectorvest.com and then sign in with your username and password. You'll see the course listed in your course listings. And then when you click on it, that's when it'll look like this, like what you see here on the screen. All right. Well, I'm going to give you about 60 seconds more to type in a question. While I give you that opportunity, another quick reminder, go to vectorvest.com/jumpstart. This $295 price will go away shortly after today's webinar is over. Right? As soon as our tech team is able to get in there and change the prices and swap things out. But that price will go back up to $495 for the mastery package. Then the price will stay $495 for a few days, and then after that, let me just actually get the dates for you here. Give me just a moment. I don't want to mess up on the dates here. The price increases on Monday at 5 o'clock to $795, and then on Tuesday at 5 o'clock registration closes. Okay, so September 12th should be Monday. That's when the price goes up to $795 for the mastery package. The self-study also increases from $295 to $495. And then registration closes on Tuesday. Okay, so there is a deadline because we want to make sure that you actually get into the class. We get everybody ready for Jim's first live session. Okay? All right. Well, what I'll do is I'm going to just basically wrap things up for the day. I appreciate you dedicating this time with us tonight, and I hope to see you in class. I know Jim hopes to see you in class as well. And have a great weekend. And whether you choose to join the class or not, we do wish you the best of luck in your trading. If you're joining the class, we'll see you in class. If not, we hope to see you back at another training webinar. All right? So have a great night, everyone. Bye.